This is Luke Rudowski of We Are Change.org, and as you know, there is a lot of talk surrounding the U.S. economy. There's a lot of fear-mongering. There's a lot of fake news out there, and to help clear all of that up, we have researcher, author, John Sneisen. You probably know him. He used to be the better half of JoJo of Weather Alternative Media, but he moved on to better and bigger things. But he is here with us today to talk about a lot of interesting things that are happening, specifically with finance. As we're getting news of yield curves, of the Fed and Trump going at it, all of this as some key people are saying that the economy is going to be doing better than ever. There's going to be no recession, while other publications are saying the doomsday trade war scenario is here. John, what do you make of everything, specifically on the backdrop of all the latest information between Trump and China? It looks like there will be some kind of deal, but it's pretty tense out there, to say the least. What's your understanding of it, John?
Well, I think it's going to be tense for a while longer. I think it's going to be a hard time, with the two hardliners of the communist government over in China and the U.S. government trying to make any fantastic deals for each other. They both want, of course, Trump is a nationalist wanting to protect his economy. Same on the communist side with the Chinese. So they're going to slap on tariffs, taxes, I call them, on their population on the Chinese side. They're going to do the same on the U.S. side. I don't think this is, this is something bigger and grander, I believe, which is more of like who's going to, take over for the dying U.S. empire. I think that's more of a fight that's going on than the trade war, which is quite small compared to the underlying big issue here, which is, of course, the mass amount of debt that these countries have accumulated. Not just their governments, their population. In China, they have people that own 3, 4, 5 houses with their real estate investments. They actually, the Chinese has created a the U.S. on steroids. U.S. went from 71 till now with all the money printing. Well, China has done that within a decade. So they are, moving a lot faster than what the U.S. did, because now currency is, of course, electronic. So it's a lot easier to do that. And of course, in the U.S., as you said, you hear these guys saying that, oh yeah, the economy is fantastic. It's great. Everything is going really well. And meanwhile, you have what you mentioned, a yield curve inversion, and let me explain that quickly for you. Yield curve inversion is the bonds that the U.S. government, so when the U.S. government does deficit spending that you hear, which is now over $1 trillion, well, that $1 trillion has to be sold to an investor somewhere, bank, or, well, the Federal Reserve buys a lot of that garbage. But what ends up happening is those bonds is now the debt, and the investors invest in those bonds and get a return. So now the return on the 2-year is actually higher than the return on the 10-year. And when that have happened throughout history, that means that a recession is coming. Over the last 7 times it has happened, a recession follows and calamity in the markets. Now, just to make sense of a little bit more out of the yield curve inversion is if you were to go to the bank and borrow money, you go and borrow money at the bank for on a 2-year term, you get X amount of percentage. But if you go and borrow it for 10 years, well, now there's more risk involved for the bank, the banksters to lend you money. But at that point, like what has happened with the U.S. government is that people are trusting. It seems like banks and others are not trusting the U.S. government to be able to pay their debt on the short term. Meanwhile, the government, the Federal Reserve has tried to manipulate down the interest rates on the long term. So that's basically what a yield curve inversion is. But every time that have happened, you see a market calamity in the stock market and, of course, in the U.S. economy.
Well, this is what's interesting, because we've been hearing about this economic downturn, this recession, this correction for so long. I mean, you have the Starbucks CEO coming out and he's saying there's no sign of a looming recession. We're firing on all cylinders. And if you really look at the market trends and the cycles that it usually flows, the cycles haven't been following the usual cycles. And correct me if I'm wrong, this is why many people believe that this bigger kind of correction, this bigger kind of hit, this bigger kind of downturn is going to be a lot more significant significant than before. But it does seem like China and the United States, they are artificially keeping the economy up somehow, even though it makes mathematically no sense at all. Like, I don't know how they're doing it, but they keep pulling out the rabbit out of the hat. And I'm like, whoa, how are things doing so well? Because the dollar on the world stage, the U.S. market on the world stage within the last few kind of months and years has been doing really, really good. So what do you think is the scenario here that they can't keep pulling this rabbit out of the hat? Since again, you look at the Chinese market, the American market, it's all based on bubbles. It's all based on lies. Why can't they just keep the lie going? As the Starbucks CEO just said, everything's great, even though we got news right now that the Dow just dropped 100 points. That's the breaking news right now. But John, go ahead.
Yeah, what came to my mind was the Lego anthem or something. Everything is awesome.
I love that song.
It's that's exactly what they're trying to make you believe. Meanwhile, of course, the economy is not doing that well. We're seeing, of course, in the U.S., you're seeing a lot of housing bubbles in San Francisco, especially on the California coast. In New York, there's where you live. There's very high prices. You see these housing bubbles reemerge because when they pushed down interest rates and made it really cheap for investors to go and pile in money, because every time they have a correction in the market, they usually drop the interest rates 5 to 6%. Well, they have been dropping it to 0, and then they tried to raise it again, but they got stuck at 2.25 and couldn't get it higher. So now they had to cut the interest rates again, and that's what you're seeing there. They're stuck at a level where if they were to stimulate the economy, they would regularly, like 5 to 6% is the average that they need to stimulate the economy. Well, if you go down, let's say 6%, well, now you're looking at in the United States close to 3.75, 4% negative interest rates. And what comes next? It's a cashless society. But let me go back to the United States and how people are saying that they're doing so great. Well, actually, what has happened is exactly what happened before 2008 to the run-up of that crisis. Is everybody piled into the U.S. dollars because you have monetary crisis. You had Argentina, losing 30% of their currency value. It would be like having $100,000. Let's say you had $100,000 in your bank account. Suddenly, the next day, it's only worth $70,000. That's pretty insane. But that's what is happening in the periphery of the world fiat currency markets, all the other countries. Meanwhile, everybody's flooding to the Federal Reserve, which is supposed to be the world reserve currency for safety. But again, at one point, people has to exit out and try to make some money there. Of course, the bankster will and the traders. So then it will just come down because everybody's piled into the US dollar. So it'll be really, really bad. Like it's 2008 on steroids. What you got to remember, in 2008, we had a massive financial crisis that was caused by some mortgage debt in the United States. That was the major trigger. Of course, there was massive amounts of debts everywhere that collapsed. But the collateralized debt obligations, the derivative that was used on $13 billion worth of U.S. real estate, that was the underlying catalyst that blew up the whole economy. Well, currently we have I looked at some numbers: $53.2 billion in auto-backed securities, which is auto loans packaged in the same way as the collateralized debt obligations that blew up the markets in 2008. And of course, now you have a way bigger crisis where you have a potential bank. I think this is going to be the next Lehman crisis, and that's Deutsche Bank. The third biggest, most systemically important bank in the world is in crisis, and of course the biggest bank in Germany itself. And of course in the German economy right now, they're in negative interest rates, like all of their bonds. You're basically investing in something, getting a lesser return. And I call it, we become monetary insane. But since 2008, they printed about 333% on an average. All the central banks, I looked at 80 central banks, that's how much money they printed more. So that's almost 30+% every year in inflation that have gone somewhere. Well, it went to the stock market and to real estate around the world. So that's where you see the kind of the not hyperinflation, but you see like heavy inflation that have gone into those markets, and people of course can't afford it anymore. So that's the big crisis there. But since 2008, we basically papered over. We hid the 2008. I call it a depression. And actually, I talked to Robert Kiyosaki. I know you talked to him as well in Hartford, Connecticut. He believes that we've been in depression since 2008 because we just shoved a whole bunch of money on top of it. Meanwhile, now we have an even bigger problem, and they're not willing to let the actual system come down. And I think it comes from they don't really have a solution in place in the United States. Canada has some decentralized fake currency based on Ripple that they use, Project Jasper it's called, at the central bank in Canada. That's their cashless move. The Fed was mentioning a little bit about something called FedNow, and of course just recently at the Jackson garbage hole in Wyoming, where the central bankers met and economists, Mark Carney put forward a paper, calling for a new world reserve currency that's going to be cashless. So I think the next the move that they're trying to do in order to keep this fake garbage system alive is to actually go cashless and put those rates into negative, because what they're going to try us to do is to force us into the economy to spend that money, because who wants to stay in a bank account that you have to pay 3-4% to keep it there, right?
Yep. And people need to realize the vast majority of money is already digital. It's already unaccounted for. It's already in zeros and computers in the Federal Reserve.
97%.
Yeah. People need to understand that. And in 2008, as you brought up, the bubble never popped. The bubble was just inflated. The problem's going to hit, and it's going to hit a lot worse. And I'm kind of curious on what you think, because when you look at, especially with what's happening with the people in Argentina, I have a friend down there in Argentina, and he says, yeah, it's absolutely crazy what's happening there financially. And you tell people who are losing their value when their money's in the bank that Bitcoin is unstable, that you shouldn't invest in gold, that you shouldn't invest in silver, you shouldn't invest in alternatives and diversify. You should keep your money in the banks and the stocks. I mean, these people are just absolutely insane. I still can't fathom how destructive these individuals are to the future financial responsibility of everyone else. And this is why, I rarely give financial advice, but my thing is always diversify as much as you can. And I think having your eggs in many different baskets is the smartest thing to do. But I kind of want to get your assessment on two more things really quickly, because obviously Donald Trump is blaming this kind of economic manufacturing downturn, the slowdown, on the Federal Reserve. What do you make of this bigger beef between the Donald and the Federal Reserve? And again, just because we said Federal Reserve, this video is probably going to be demonetized and downranked. It just came out recently that Federal Reserve, one of the terms that we keep talking about, is automatically on the blacklist for YouTube videos as exposed by James Corbett. So this video goes down the rabbit hole, and preemptively, thank you guys for sharing it, for doing that. But really quick, John, what do you make of this kind of larger kind of beef? Is it real? Is it going to lead to something legitimate between Donald Trump and the U.S. Federal Reserve? What's your take on that?
I think it's just a theatrical play basically between the two, trying to make it look like Donald Trump can control the Federal Reserve. Meanwhile, the Federal Reserve is a private institution that is owned by its shareholders in its 12 districts, which is the local banks. They pay dividends to those banks, and of course they say, everything goes back to the U.S. Treasury. I think a lot of that money goes back to those banks again for owning. Having the ownership of the local Federal Reserve branches. The Federal Reserve is not federal. It has nothing to do with the U.S. government whatsoever. Here in Canada, we have a different situation where we actually have a federal central bank owned by the people, but the government doesn't borrow money from there. They go directly to the scum banksters, RBC, TD, all those banks to borrow money, because if they went to the actual public bank, the people could actually stand up and say, stop borrowing money on our future. But I think this whole thing between the Fed and Donald Trump, some people say that, Trump is going to put in a gold standard. You know what? I don't have any belief that that's going to ever happen. No matter, how much Donald Trump might or be a good guy or whatever he is, he hasn't done very much good for the economy. He hasn't gone anywhere. other than trying to push the Fed, of course, to cut interest rates to stimulate the economy from not collapsing. Because what you got to remember when you print money out of thin air and you go to the bank, you take out $100. Now that $100 comes out of zero, comes out of thin air, but at least it exists on a ledger. With the interest, that interest doesn't exist at all. So every single time there's more debt into the system, there's more interest, and it's just a vicious cycle. So you always have more interest in the system that you could actually ever pay back. If you paid off all the debt, there would still be interest owed on that debt. And I think that Donald Trump and this beef between the two, I think it's almost like a theatrical play. That's my belief anyway. People might disagree with me, but at least that's what I think.
Yeah, I mean, I thought about that too. I was like, what if it's just a big game? What if we're not in on it, and privately they're like, okay, we got to put up some kind of real fight here to make it look like legitimate. It could be one possible scenario. Again, this is just my own personal opinion. I don't have any facts and evidence to back that up. I think it's important for independent media to say that. I don't think enough of us do that, but that's just my opinion. It's interesting to hear kind of your perspective. And my last kind of question to you is, what do you think will happen? Where do you see this going? And what are some of the realistic effects? Like, are house prices going to go down? How bad will this hit? How do you see things moving forward realistically with the current stage of the markets?
Yeah. Well, it's going to collapse. That's the number one thing that we know for sure. Of course, we can't predict the exact timing because they've been, as you said, been manipulating it. But what's important with understanding a fiat currency is that understanding what gives its value. Well, it's actually the trust in the fiat currency that we actually believe that will keep its value, and we use it for transactions in our daily life. When that stops, that trust in an instant, it takes about a year. From all the studies, I studied about 15, 20 different hyperinflations. A year was the time frame from that trust link was broken from the people that they said, like, I'm not going to use this, toilet paper currency anymore. I'm going to use something else, gold, silver. Now we have, decentralized cryptocurrencies. They are going to move towards those solutions that, actually keep their value. You were kind of making fun of them saying that, the Bitcoin is very volatile. Well, if you actually priced everything in Bitcoin, it'd be extremely stable, and the inflation would be extremely low until 2100 when there's no inflation. It would be a natural deflator because there's always people that have lost their Bitcoin, so there's less and less Bitcoins. So there's a huge scarcity there on the supply of that. But again, there's several outcomes. So let me just put down a couple outcomes, be quicker before we end this conversation. One of them is, of course, that they're going to put in a one world global currency, which, of course, Mark Carney was proposing right into our faces at the Jackson Hole symposium, where he was talking about the Federal Reserve. What we need to do, he said, was to replace the US dollar as a world reserve currency with a electronic digital, he called it Libra-like currency. So that's one of them, that they could go to global cashless system, one world currency. I think that's crazy. Then, of course, they could do something where they went to that digital system. Then they could let all the currencies devalue underneath there and still keep around, for the peasants, the US dollar, the Canadian dollar, whatever local currency you use, severely devalued, what just happened in Argentina, and then go to a cashless system on a local level as well as the cashless SDR system on top. There's also that you could go to just a regular monetary system if the cashless system fails. But who knows what that would look like exactly the same when I said just with cash. Then, of course, there could be, rogue nations out there that wanting to stabilize their currency by backing it by gold. So we could have a gold-based currency. Add a crazy thing in the future. We could have a global SDR backed by gold, because I know the IMF holds gold in their reserves. So that's also another outcome. And one of the last outcomes I think that could happen is that, let's say that, they just let the banks fail. They didn't even do a bail-in, which, is a risk where they could actually take your money to give money back to the bank that, were betting with your money on terrible investments. They could actually go to say that, okay, yeah, we're not going to do any bail-ins. You're going to lose all your money. But if you come over to our new system, so it comes back to a digital currency again. If you come over to this new digital currency run by the government, well, now you'll be fine. Come into the warm and cozy social credit of China, and you'll be fine. We're gonna rank you, make sure that you're a good individual, but don't you dare speak against us, because then we'll stop you from flying. We'll have certain limitations. You can't buy certain food or have certain real estate that you'd be able to access if you don't listen to the government. So that's another dystopian future that we could end up in. But I think there's going to be some kind of future where we have a digital form of currency. And the last one would be, of course, that we have a free market of currencies that all these stupid central bankers we've seen through their Ponzi scheme, and the nation states fall, and then we have a truly free currency system where they compete with each other. You could have a Dash, Bitcoin, you could have all kinds of decentralized currency. You can even have gold being used over here, just depending on. So you could have a free market where those currencies are interchangeable in between different communities, or different communities use their own. So that's I think the hopefully the better future of the three other ones that I was talking about. But yeah, I really hope for the future that we could, with of course the digitalization, I think there's that two-edged sword that either we're gonna end up in total enslavement on the one side, or we free ourselves by having all these distributed systems and giving back the freedom to the individual again. And potentially we could have a really great future ahead of us, instead of a total enslavement grid that I think we're running towards if we let this system keep on, running our lives, Luke.
Yeah, I mean, it could go either way. There's a lot of chatter and talk about, the economy crashing and it being blamed on Donald Trump. And, outside of all the speculations and theories out there, I think it's pretty clear that our current financial system has failed us before, and that it's most likely going to fail us again. I think those are absolute truths that we need to realize in all of this. And John, thank you so much for your input. Where can people find out more information about you? Where can they find your work?
Yeah, they could find all my work at theeconomictruth.org. And you could, of course, find me up on Steemit under The Economic Truth. You could find me on u.community, a new blockchain platform that I'm working on under True Economic there. Or you could go and just search up John Sneisen on Google, and you'll find tons of YouTube videos and content that are created over the last 5-6 years.
Yeah, John, definitely thank you so much for your time. Send me your Steemit URL. We're going to put it in the description. We're also on Steemit, so definitely go check us out on there as well. Thank you so much for your input. Hope you guys appreciated this video. And just because we talked about the Federal Reserve, this video automatically is not going to be searchable. It's not going to be findable. It's not going to be recommended to you.
Conspiracy theorist.
I know. Rationally talk about history and things that people should know. Bam, you're hurt and you're punished. So the only way to prevent that is for you taking action, sharing this video, and supporting real independent media. Because you guys still do that, we're still here somehow, magically, hanging on. It takes a lot to take us down, but we're here because of you, and that's why. Love you guys. Stay tuned for more here on wearechange.org.